Good afternoon. This is Sean Golding with Golding and Golding, here to discuss the basics of what's money laundering and the criminal tax and other just criminal consequences that stem if you get caught. Money laundering is a serious crime. It can result in significant monetary fines and more importantly prison. If you get busted and you get the wrong sentencing on the wrong day, you could see 20 years behind bars and well as fines and penalties. So it's one of those types of crimes that it's just kind of known. You try to steer away from it, right? There's other things people do that result in significant less jail time, could be equally if not more profitable. The idea of money laundering is the idea of taking something from ill-gotten gains and then cleaning that money, and now you've got new money, and that new money is from something legal. Like you invested money in some rental properties, those rental properties generate rental income. The rental income, unless someone knew that the properties were purchased with ill-gotten gains, it's just rental income, right? Your property manager may not be the wiser. They're just collecting the rent, you're pocketing it, life's good. Why? Because you can't just deposit that money in the bank. We've all seen the movies. Joe walks into the bank with $5 million in a duffel bag, dumps it on the desk and says, here, deposit this. There's not much you can do with that money when it's tainted. Whether it's you want to buy expensive cars, expensive toys, deposit it in the bank. People want to know where the origin is, where that income was generated from, and people don't want to give up that information. Ancillary crimes that tend to also join in are things like structuring and smurfing, depending on how that money is deposited into the bank. So instead, in lieu of doing that, what someone can do, or what they can try to do, is invest in a legitimate business, which then churns out legitimate income, or income that is legally sourced, save for the fact that the seed money was from ill-gotten gains. It might be much harder for the government to trace. Here are some common examples of money laundering. The restaurant business is an industry that's very common. You invest a bunch of money as an investor in a business. Maybe you own 20%. Right now, you invested your ill-gotten gains. At the end of the year, you paid out some dividends. Those dividends, the idea behind all this is if you get caught with money laundering, it's a crime. But the idea is the dividends paid from a restaurant in and of themselves, absent any ill-gotten gains in the investment, are legitimate income, right? A very common way to do it is real estate. You have this bag of money sitting there. You can purchase properties. Oftentimes that's the easiest because, especially here in California, if you're paying cash, all the contingencies can be pretty much removed, and most people don't really care. And then once you own the real estate, you could churn out rental income. You can just hold it, right? So that there's no income being generated at the time. Time passes, and then you sell that property in a good market. And if it's your primary residence or one of them is great, then you may even be able to try to get the 250, 500 exclusion, depending on how you're filing. Investments in other type of funds, ETFs, offshore accounts, mutual funds, CCOVs, things like that. Again, the money that comes out is clean, right? The money that went in was dirty, so it's much harder for the government to trace. Unfortunately, if the money is from ill-gotten gains, you can't do the offshore voluntary disclosure program. Why? Because the IRS isn't going to use voluntary disclosure program, new VDP, for example, as a way for you to launder money, right? You have this illegitimate money, you put it into some foreign accounts, you walk into the IRS, oh, I'm sorry, I didn't know I had to report this stuff, and then you pay your penalty and you go on your way. One of the key elements you couldn't do streamlined or delinquency procedures or anything like that anyway because it's not willful. But even if it was willful, it has to be legally sourced money. We have lots of information available on our main website, goldenlawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding and Golding. Thank you for your time. Enjoy the rest of your day.